Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to today's live stream. So it's a big day for gold and silver. Silver right now is up over 7%. Now that's pretty good. Gold's up over $100, about 2.25%. Also not too shabby. And while today's move is nice, there's a lot more going on here on the chart, right? It's a lot more than just today's move. What we're seeing is a very bullish setup for the precious metals. The technicals and the fundamentals now supporting that. We're going to go over both in today's live stream. I'll give you the latest and why I think the gold and silver bull market now, assuming that we close the day without some massive correction between now and market close, the bull markets are back in a very significant way. We've got a lot of news to cover. A lot of charts to look at, so stick around. And if you want to learn how you can win some free silver, then check this out.
For the first time ever, SD Bullion is giving away 2 monster boxes of silver coins, but not just any silver. Learn more today at sdbullion.com/sweepstakes.
Okay, so let's actually take a look. Here's the silver chart. So we're going to look at this, but let's take a look at this post from Friday, because this kind of gives you an idea of, where we're coming from. So this is from February 5th. That was actually Thursday. So my mistake. So Thursday of last week. And I wrote here, this silver chart is a setup, not a guarantee, but it's worth tracking closely. And the reason we're going over this is because I want to demonstrate that this is not some kind of like hindsight bias when I look at the setup today, which we're going to go over. I want to show you what backdrop this is occurring against and what we've been talking about for a few days here. So I said, what I'm seeing, a possible falling wedge, converging trend lines, a clear ABC corrective structure, declining volume into the lows. That means selling pressure may be exhausting. And then a bullish scenario would be a breakout above the wedge and a follow through on rising volume would favor this being a corrective reset within a larger uptrend, referring to the major correction all the way from $121 down to $64 briefly that we just witnessed in silver. So you have this setup here. Now let's look at how things are actually playing out, because it's pretty much exactly the bullish scenario that I outlined in that post on X. By the way, you can follow me at x.com/stacksmarter if you want to get posts like that. Almost up to 10,000 followers over on X. So if you want to go over there and follow me, I would greatly appreciate it. So if you get value from these live streams, these videos, please do that. Subscribe to the channel also. So what we're seeing is a breakout following a nice recovery on Friday. We got up to touching the top boundary of this falling wedge, which is often considered a bullish chart pattern, right? Like these chart patterns, falling wedge, it can go either way. It can break to the downside or to the upside, but statistically, probability-wise, it's more likely that it goes to the upside. And that's what we got today. So this is a 4-hour chart, and we opened last night slightly above the top boundary. Then we had a little retest of that level, and now we're moving up. We're at 83.45 right now. Nice recovery in the silver price. And if you notice this last candle here, it has the kind of the secret sauce to all of this, which is rising volume. So you had declining volume throughout the ABC correction. What you want to see on the breakout is rising volume. So that means there's a lot of buying interest in the metal as the price is moving higher. So this is not like some thin liquidity tape painting move. This is real buying occurring. Now, mind you, it's in paper silver, but paper silver is still important. We'll talk about why that might change later in the live stream. Like I mentioned, we got a lot to cover, but this chart setup is super bullish, right? This is like, this is kind of what you want to see after this, except maybe we change that to a green arrow. Yeah, there we go. So, I'm not saying that it's going to do exactly what the green arrow shows here. Anything could happen, right? We could see maybe a retest of this falling trend line. So that means, the silver price could go down, right? It can always go down. But if this line holds as support and we get a bounce, that would be good. If we go straight up from here, that would be good. All of it supports a bullish thesis looking forward for the silver price. Gold also looking pretty good. We had a breakout from a falling wedge, right? This is a similar pattern to what we have on silver here, sort of a micro version of that. And we broke out from that on Friday, and the price now is doing very nicely. So the technicals here are very good, right? A recap, we talked about some of this on the last live stream where we covered this chart pattern, but I'll give you a quick recap. We got a bullish MACD cross here on the 4-hour chart on Friday, right? Setting us up for this breakout. So those moving averages continue to be in a bullish alignment. That's looking good. The RSI is only at 52, so it's no longer an oversold territory, but that's actually a good thing. It means there's momentum here, but we're not anywhere near overbought, right? So this move to the upside isn't anywhere near exhausted. The RSI and the silver price got reset, they got reset real good with that drop from 121 to 64 or so. But that's actually, good. That means that we're in a nice position for silver to run higher now, maybe to get back above $100 by the end of February. I think that is where we're headed. And, as we witnessed with the run to 121, silver can move up pretty fast. Now, it moves down quickly too, right? It takes maybe the elevator or the mine shaft down, whatever you want to call it, like plummets at terminal velocity downward is what we saw with that correction recently. But the move to the upsides can happen pretty quick too. So it's kind of an escalator on the way up. And I think we are back on the escalator heading higher. Also, notice this yellow line down here at the bottom. This is the accumulation distribution indicator, which, the way that this works is it looks at the price action on the individual candles, then it compares that to volume, and it kind of lays out for you whether holders of silver are distributing it, meaning they're, lightening up on their positions and selling it, or are investors accumulating and building positions in silver. The fact that we had the price falling while the accumulation distribution actually ticks slightly higher, that's known as a divergence. So that is actually also a very bullish sign for the silver price. And now we're starting to see that, right? On Friday, I was a little hesitant on that live stream because we didn't actually see a breakout. But now I'm switched into, full bull mode. I'm pretty much already positioned about as much as I want to be in terms of paper silver. I bought, for me, fairly significant amount of physical silver on the decline. I bought it down around $75, so I didn't, cherry pick the bottom, but I'm feeling pretty good about that purchase today, even though, it's probably going to be weeks before I actually receive that silver. I ordered it from SD Bullion. I'm sure they're backed up. They saw a huge influx of physical buying with the recent correction, and that's actually a really good sign for silver too, right? It shows that this bull market, it's not being entirely driven by, paper speculation, that the stackers are actually getting in there. And the stackers, I think are just proving to be smart, that they waited to pile in until we got a major correction, right? That's what you want to do, buy the dips. Stackers have been in this market for a long time, right? And they know a good deal when they see it. Leave me a comment or put it in the chat if you did any dip buying. And of course, nothing I'm telling you here is financial advice. Just kind of sharing with you my thoughts on things, what I did, but I would like to know what you did as well. So let me know if you did some stacking or accumulated some miners. I did both on the recent correction. The miners, by the way, doing pretty well. SILJ ETF here up 5.4% today, kind of confirming the recovery in the metals here. It's good when you see the miners moving in conjunction with the metals. Same thing, the GDX here up almost 5%. So kind of an interesting dynamic here. Just to comment on, silver is up 7%. The junior silver miners up 5.4%. So the miners are actually lagging the spot price of silver. Whereas with gold, it's the opposite. You've got the gold miners up 4.75%, while gold is just up a little over 2%. So what does that mean? Well, I do think that it means that the silver miners especially are still very undervalued. If you look at this ratio here, let me get this to a daily. Okay, good. So if you look at this chart here, and let's switch this actually to like a weekly. This is the SILJ ETF divided by the silver price. And you can see we're not as low as we were when silver was spiking up to $121, but we're still near the lows for this chart, which suggests that the miners are still undervalued relative to the metals. And that is a good sign. That is a sign that we are still not in the terminal phase of this bull market, right? One of the things that made me so bullish back in April of 2025, and you can go watch my videos from that time period. I was saying you got to get into silver, because the gold to silver ratio, we're looking at that chart now, by the way, was up here over 104, which is indicative that, a bull market in metals is still very, very young, because what you see as the bull market progresses is silver starts to outperform gold, albeit with some fluctuations, as we saw recently. But over 100, that means that you're nowhere near the terminal phase of the bull market. And what did we see? Well, that ratio collapsed. It got as low as the low 40s when silver was at its peak. Now, silver's still well off the highs. Right now, the gold to silver ratio around 60. But again, that to me is also a very favorable ratio, in the sense that in previous bull markets, if we zoom this out, you can see that we got a lot lower on the gold to silver ratio. Like, for example, this low here is in 2011, when it got as low as 30, or right around there, right around 30. And then in 1980, got as low as like the mid-teens, right? We're still at 60, even though silver's at $83 and change, which all of those ratios, they kind of indicate that this bull market still has a long way to go. And we're going to cover, some of the fundamentals in this live stream too, which are going to support this bull market moving forward. But I wanted to show you those charts because it's really one of the more bullish setups that I've ever seen in the metals. I mean, there's always this one, right? This guy right here, this giant cup and handle pattern that has a 46-year base that silver recently broke out of last year. That's pretty bullish. But aside from the very long term, which is extremely bullish, and pardon me while I clean that chart up a little bit, this right here, given all the factors that I outlined, all those other indicators, which I just cleared off the screen, so I wanted to give you a good look at this on the daily. This is a good looking chart, right? This is nice. This is, instills a lot of confidence in me personally that we are headed much higher in the silver price, and the recovery is in fact underway. And it makes sense, if this was an engineered takedown, some kind of manipulation, you would expect a sharp rally, a sharp snapback. It just kind of makes sense. So that's that. Let's see. Let's get into some of the news, some of the fundamentals. We've got some interesting stuff to cover here. First of all, who saw this? Who watched the Super Bowl last night? I watched a little bit of it. I'm reposting this from James Henry Anderson over there at SD Bullion. But subliminal messaging approved is what he wrote. And there was this cart in the halftime show that said, compro oro y plata, or buy gold and silver in Spanish, which, don't mind if I do, was my response to this. But I thought this was interesting, and I know a lot of people watch, football. Personally, I don't know. I think a lot of the sports, it's kind of like the bread and circuses of our time. But hey, you might as well enjoy it while it lasts, because you got to make do with what you got. So that's that. Just a little divergence here. Let's talk about what's going on in China. We're seeing a recovery there as well right now. Latest data from the Shanghai Gold Exchange, silver price 19,650 kilograms. Yuan per kilogram. So that's the price on the Shanghai Gold Exchange. If you do the math on that, it comes out to about $2,838.57 per kilo, which, if you further do the math, is about $88.29 per troy ounce of silver. So that's on the Shanghai Gold Exchange. So there is still a premium there over Western prices, but it's only about $5. So we are seeing those premiums shrinking, right? Now, speaking of China, and we got a bit more to talk about China as we go through this live stream, but I thought this was interesting. If you don't follow this guy, Oriental Ghost on X, definitely follow him. He posts a lot of very interesting information about the precious metals markets in China and in Asia generally. And this was the daily report from the Shanghai Gold Exchange, Shanghai Futures Exchange, which the thing I really want to draw your attention to here is that the daily silver vaults over there, they got about 318,546 kilograms. But look at the daily change, down 31,354 kilograms. So that's almost a 10% drawdown in the silver inventories on the Shanghai Gold Exchange in one day, right? So that's pretty significant. And that's going to be a trend, I think, in 2026. We're going to see increasing demand for physical delivery on these exchanges because as things get more topsy-turvy in these markets, the counterparty risk rises, right? That's one of the big benefits of holding a physical gold or silver bar, round, a silver coin, whatever, physical metal in your hand is you don't have that counterparty risk. You don't have that risk that one day the exchange you're trading on just throws their hands up in the air and says, you got us. It's a game of musical chairs and we don't have the metal. So here's some fiat. Because that's always a risk, right? When you're trading metals on an exchange, but not when you take physical delivery. So I think as things get more heated here, as the fiat currency system that we live in, the global economy, as it continues to go through its death throes, you're going to keep seeing the drawdowns of these inventory levels on physical exchanges. Now, in that same vein, let's take a look at this. And I haven't actually even looked at this yet, but this is the most recent COMEX inventory report. Okay, so it's not much changed from what we were looking at previously. It's down a little bit, down about, 3 million ounces since the last report. So not quite as much as what happened on the Shanghai Gold Exchange. But so this is the total registered silver on the COMEX. This is the total eligible. This is the combined total, just under 400 million ounces. All right, so that's going to be important as we kind of go through this. So that's going down a little bit to break down. Now, look, I'm not a paper silver guy. I've never traded futures contracts. Like, to the extent that I've done any paper trading, it's mostly been on ETFs. Like, I'm a small retail investor guy. I'm not that sophisticated. But my understanding of how this all works when you're trading on the COMEX is the registered silver is basically the silver that's, in their warehouse ready to go. If someone says, hey, give me my silver, they have an outstanding contract on silver, they want to stand for delivery, this is the silver that is available. Eligible silver is silver that is in the COMEX warehouses, but it is spoken for, right? Like an ETF, a family office, some investment entity owns this stuff, and they're just taking advantage of the COMEX for cheap warehousing, right? So it's there, but it's spoken for. So it's not actually available for delivery, but it could happen, if whoever has the claim on that silver decides that they want to sell it, it's possible, I guess, that it could get delivered for the right price, but it's not just like, liquid silver. So total ounces, just under 400 million. Most of it is in the eligible category, about 100 million ounces that's actually readily available for delivery on the COMEX. And then this is the March open interest right here, 76,000 contracts. So that's coming down, and it was up over 100,000 a couple days ago when we had, silver up over $120. This was around, I think, 105,000 contracts actually, but even 76,000, each one of those contracts represents 5,000 ounces of silver. So this is where, the open interest right now is a little over 380 million ounces of physical silver. Now, you've heard, this is going around, right? This is kind of the reason I bring this up, because there's been a lot of talk about this on X, on YouTube, among silver influencers. And, it is a potential crisis brewing. I wouldn't necessarily count on some kind of COMEX meltdown, some kind of force majeure thing happening in March. It would be very unusual for everybody who holds a contract on silver in March to stand for delivery. But March is historically a month in which more investors stand for delivery than others. It's a delivery month, but it's usually only a small fraction. But it just shows you, how much leverage there is in these markets. And look, anything could happen, right? These numbers can change. There's a fair amount of time between now and March. And I believe that the first day for March delivery, it's sometime in late February. If you know the exact date, you can put it in the chat or in the comments. I think it's February 26th is the first day for March delivery. But this definitely bears keeping an eye on, right? Even if there's not some imminent crisis in March, there very well could be, first of all. If that does happen, by the way, if everyone were to stand for delivery at the COMEX, it's not like, the COMEX would collapse. Probably what they would do is they would just say, sorry, we don't have the silver, so we're going to rewrite the rules real quick and force cash settlement of your position, right? And you get whatever the paper price is paid in fiat because they have endless fiat. You can, press a button and create as much as you want. It's not the same thing as physical silver, but that would be an important undermining of the paper silver markets. Everybody kind of hates the blatant manipulation in paper silver. Well, if you want to talk about the sort of thing that would end that, them, declaring force majeure, declaring cash settlement only, that would pretty much be the last time they could play that trick. So then you might expect to get some real price discovery in silver, and certainly you would want to be holding physical metal at such a time. So, that's what stackers do best, right? If you don't hold it, you don't own it. We've been saying that for years, and just because, we've been saying it for a decade or 2 decades or 3 decades, it doesn't mean that it's ever been untrue. It just hasn't been put to the test, right? So anyway, this is something to keep an eye on as time goes by here. Now, let's move on. Let's talk about something that Scott Bessent said in Senate testimony recently, because this is going to tie us back into China. But here's the headline from Benzinga. Scott Bessent would not be surprised if China was building digital assets backed by gold. Oh, really? You wouldn't be surprised by that? That's interesting. Considering you're the Secretary of the Treasury. But he's told the Senate Banking Committee that he would, quote, would not be surprised, unquote, if China was building digital assets potentially backed by gold rather than the yuan, given China's large sandbox in Hong Kong. So Senator Cynthia Lummis asked Bessent directly whether China is using digital assets and blockchain to build an alternative to American financial dominance. And Bessent responded saying, here's his quote, "We don't know that for sure. There are lots of rumors that China may be developing digital assets backed by something other than the RMB, perhaps gold-based. We haven't seen that." Well, yeah, I mean, he should be concerned about this, right? We did just have Xi Jinping stating that he wants to make the Chinese yuan a rival global reserve currency to the dollar. And if you were to back it by gold, that'd be a pretty good way to do that, right? That would be a pretty good way to undermine the dollar status as the sole world reserve currency. And it's not like a gold-backed yuan would even immediately supplant the dollar, replace it, but it's going to eat into the market share quite a bit. And if there are concerns about the solvency of the U.S. federal government, us making good on our debt, our ability to service and pay our debt, then the U.S. Treasuries are going to be less attractive as a reserve, right? So even if banks don't dump them entirely, they may start rotating them out and putting that cash into hard assets like gold. They've already been doing that. But a Chinese yuan that could be used to settle international trade might be, a significant problem for the U.S. dollar, to put it mildly. Perhaps this is why the Chinese People's Bank of China has been adding gold for 14 months straight. February is probably going to be the next month, right? We're just going to continue seeing this accumulation of gold by foreign central banks, by those looking to diversify out of the dollars. And it's also possible, there could be a gold-backed token. It was actually, 3 years ago now. I think this was reported on centralbanking.com, covered this story at the time, January 2023. Wow, that's crazy. It's been 3 years. But Russia and Iran were discussing a joint gold-backed stablecoin, according to this report. I'll just read this to you briefly. The Central Bank of Iran is in talks with Russia to create a stablecoin for foreign trade settlement to replace the dollar, ruble, and Iranian rial. The digital currency would be backed by gold and operate in the special economic zone. Okay, so anyway, this was basically just to facilitate bilateral trade between Russia and Iran. But clearly, these are both members of the BRICS nations. There's been a lot of rumors about a BRICS alternative gold-backed currency. So now China, the biggest economy in BRICS, if they in fact are working on a gold-backed token, this is a serious threat to the US dollar's status. And it's also likely very bullish for the price of gold and indirectly the price of silver. I mean, if they need to back an international currency with gold, they're going to need a lot more gold. They're going to need to continue buying a lot of gold. And that means that, on the gold chart, I mean, just look at the gold chart. It's incredible when you look at what this is. And this also, by the way, is kind of similar to what we are seeing in silver. We had this huge breakout here, a big cup and handle. I'm not going to draw the whole thing, but here's the cup, here's the handle. We got this big breakout. This also, it's not quite as big as the silver cup and handle, but this goes back all the way to 2011. So this is also a huge base. This is a bull market that you would expect to last several years. And this is the sort of fundamental that's going to drive it, right? The potential for a gold-backed currency. And, the global economy is desperate, I think, for sound money, because it's clear we're in a race to the bottom among all these fiat currencies worldwide. The current fiat system, it's pretty rare for the whole world to operate on a purely fiat currency system. This one dates back to 1971, when Richard Nixon took us off the gold standard, ended the convertibility of the dollar into gold. That's a long time ago, right? This is an old, aging, decrepit fiat currency system. Prior to 1971, the idea was, you had the Bretton Woods system that the US dollar was backed by gold, and that's why the dollar was the reserve currency. So prior to World War II, everybody just kind of had gold. Well, after the Second World War, everybody was so impoverished and depleted by that conflict. The U.S. had acquired pretty much all the gold. So everybody said, okay, instead of using gold as the reserve, we're just going to use dollars, and the dollar will be pegged to gold. And that lasted for a while. But, we had the Great Society, we had the creation of the welfare state, we had all this social spending, we had a bunch of war spending in the Vietnam War. And it turned out that we were just, abusing that privilege of having the reserve currency to spend a bunch more money than we actually had gold to back it. And so what happened? Well, Nixon had to end the convertibility of the dollar into gold. And now, as I mentioned, that was quite some time ago, over 5 decades ago. That's a very long time for the whole world to be running on just paper that's backed up by nothing more than confidence, right? It's a confidence game, also known as a con game. That's where that word originates from. And the whole thing is backed by confidence. And that kind of explains a lot of the actions that you see taken by central bankers, the things that politicians say, the things that, Scott Bessent says, oh, I'm not concerned about that, right? He's got to put forward this air of confidence, right? Because it's all about confidence in the dollar. Now, the dollar is backed by something, of course. It's not just backed by the full faith and credit of the Federal Reserve and the federal government. It's backed by, a bunch of aircraft carriers and, a massive military. And that kind of transitions us to our next story, which also involves Iran, curiously enough, as the last one we covered was regarding their creation of a gold-backed stablecoin. Well, this is a dated story. This is from last week, but, we did shoot down an Iranian drone that was approaching a U.S. aircraft carrier last week. This is from February 3rd, but we need to just talk a bit about Iran here. So this is from Israel Hayom. So, this is an Israeli news outlet. So, take everything with a grain of salt when it's, any news outlet really. But this may have a bit of a hawkish spin to it. But negotiations with Iran stall. Military options return to the table. So currently, there are talks being held between the U.S. and Iran. And the whole thing is very, interesting, I think, because they're saying now that there's no progress on the nuclear issue. Of course, in June of 2025, according to President Trump, the Iranian nuclear program was completely destroyed. Right? I didn't think this was going to be an issue anymore because he said it was a completely decisive strike by the U.S. in June, and we took out the nuclear facilities. We destroyed all their uranium. Of course, that was all BS. Just hyperbole by a politician, pretty normal stuff. But they still are working. They still have these hardened underground facilities. They still have the ability to work on their nuclear program, and now they're making that a sticking point in these negotiations which are going on. And look, it's looking to me, at least, like a conflict with Iran is imminent, right? Which is kind of frightening because that could draw in China, and all of this economic warfare could suddenly become very hot. But, these things are going to happen regardless of what you or I do, and all we can really do is get prepared. Coming up, there is a meeting with Israeli Prime Minister Benjamin Netanyahu. He's coming to the United States. I believe they're scheduled to meet on the 11th, so in 2 days. And the agenda, this is from Al Jazeera, it says the talks will address the U.S.'s ongoing negotiations with Iran. That's from the Israeli Prime Minister's office. As Netanyahu believes Tehran should be pushed for limitations on ballistic missiles and ending its support for regional groups such as Hamas and Hezbollah. So that's the position that Israeli PM Netanyahu is taking. Now, that seems like it's probably going to be a non-starter for the Iranians, right? That's pretty much their entire defensive strategy of establishing deterrence in the region. They've got a bunch of ballistic missiles, and they have their so-called axis of resistance there. I don't think they're going to come to the table on either of those issues, let alone, the whole nuclear thing. So this may just be some, political setup for more kinetic action. They can say, well, we tried, right? We tried negotiations. They just didn't work. And that is likely going to be the setup for the next phase of this conflict. They had, what was it, the 12-day war recently. Well, that wasn't the end of things, not by a long shot. And, this is important for the price of precious metals because, well, there's the aforementioned, attempts by Iran and Russia to undermine the U.S. dollar with, their bilateral gold-backed currency. Now you've got China, according to the U.S. Secretary of Treasury, there are rumors, at least, that China is working on the same thing. And, we may be going to war with Iran. There's probably a lot to this. It's not like a one-issue conflict, but I would expect that, the Iranians selling oil to China, their attempts to undermine the U.S. dollar, a lot of this has to do with the petrodollar, etc. What's it going to mean for the price of oil? Well, look at the price of oil. I mean, I don't even remember drawing this wedge here, but I guess we were following this wedge here, which this is monthly. Okay, that's why I didn't remember doing that. Yeah. So let me reset this. This is a chart of WTI crude. Yeah, I think I actually did talk about this in a recent live stream. You got this falling wedge in crude oil, and then things started to heat up with Iran, and it broke out. Now it's kind of treading sideways because I think what oil is looking for here is some kind of a fundamental catalyst to move one way or the other, like either we reached a peace agreement or the peace agreement didn't work, right? And that's why it's kind of chopping sideways like it is. But it seems very unlikely to me that given what they're asking for, that these negotiations are going to, result in anything. And it's very likely that both sides are just using this opportunity to stage their forces for what's going to be, a major escalation in this conflict. And over the past several years, we've kind of been waiting for the other shoe to drop. And there have been a lot of these sort of non-starter conflicts. Thankfully, nothing has escalated there, but it is always possible that things could escalate in short notice. And, you might see the Straits of Hormuz close. Something like 20% of global crude oil production flows through there, as well as significant amounts of natural gas. Could lead to a sharply higher price in oil. Likely also sharply higher prices in gold and other safe haven assets. So, it's just something to be aware of. You might want to be positioned in a way to at least financially, insulate yourself from some of that, because that's going to have far-reaching consequences that, no stacking or investing is really going to be able to protect you from. But at the very least, if, terrible things are happening in the world, then we can, insulate ourselves by positioning ourselves intelligently. Let's see, what else can we take a look at? Let's take a look at Bitcoin. So Bitcoin, as I detailed, was breaking down below critical support here. This was a trend line that we were watching dating back to the, the 2021 highs, actually. That's what we had there, the 2021 highs, and then a significant area of resistance in 2024. Well, Bitcoin broke below that. It also was breaking down from, I don't know, it kind of looks to me like a head and shoulders pattern. Here's the neckline in orange, head and shoulders top. And we can go like that. And it broke below that, plummeted, broke through this key support. Now, interestingly, it did rally. It dropped as low as $60,000, but it rallied from that, but it hasn't gotten back above this area of critical resistance. In fact, it retested it and bounced right down. So this looks like kind of a bearish setup for Bitcoin. The reason I'm talking about this is I've talked about it a few times recently, and I received some positive comments from viewers who said that they like seeing the macro analysis, the precious metals, as well as some other asset classes. So I can continue doing that if that's what you want. Just leave me a comment down below. If you're watching this later, put it in the chat now. If there's anything in particular you want me to cover. I see someone in the chat here is saying, hey, Smart Silver Stacker, what are your price predictions for gold and silver this year? That's from Richie Luxury. Well, thanks for the comment, sir. And let's see, price predictions for gold and silver this year. I suspect we will close above the previous highs. So I think that we are going to close above $5,600 gold, and I think we will be finishing above $121 silver. What highs could we hit? Where we close the year is not quite the same thing as like where we'll get in the year, unless we close at the very highs of the year. But I do foresee gold getting above $6,000, even if it doesn't close the year there. I think we'll get above $6,000, and I think we'll get above 150 on silver. Those are my, it's crazy because right now silver's at $83, but I still consider 150 to be a conservative price target. Not financial advice, by the way, and this is not like based on any particularly rigorous analysis, because I'm just answering a question in the chat. Someone says, is now a good time to buy? Well, that's a good question. I guess that's always the question everybody wants to know, right? Is now a good time to buy? Well, first, let me just say, I can't give you financial advice. It's not a good time to buy if your situation doesn't mean it's a good time to buy, right? For silver, I do view a breakout, and it looks like we're going to close on the highs of the day, in fact, because we only have about 50 minutes left to trading. So I do view what we're seeing in silver today as what I would consider for myself a buy signal, right? It's like there's a lot of uncertainty. Now we've got a chart pattern that is supported by a number of technicals, which suggests that the price is heading higher. So for me, I'm not buying any because I bought a bunch when it was correcting, right? Because I was confident. It's a little riskier to do it then. It's a little less risky now. But, for me, I'm a long-term holder of physical silver. You don't ever want to buy physical silver if it's like something that you're trying to sell in the next year or two. There's better vehicles for that. But yeah, I think it's always kind of a good time to buy physical silver personally. That's kind of been my approach. I try to buy the dips, but, sometimes you miss the dip, and I do think that the price is heading higher. So dollar cost averaging sort of like always makes sense, because, if you buy today a small amount and then the price goes down, well, okay, you can buy a little more and bring your average down. If it continues to go high, great, you didn't buy the highs. And as long as you're in a confirmed bull market, then, you're in good shape. And for me, physical silver is really more of a long-term holding. It's not really about the fiat dollar price, right? It's about how many ounces I can have. So I continue to earn money. I continue to convert it into real money, which is gold and silver. And I do think with the gold to silver ratio back above 60, silver is looking nice here. Right? With it down in the 40s, I was thinking, maybe it's time to start doing some gold. But now, gold to silver ratio 60. So I like silver, I think, relative to gold at these prices. And I don't know. I know that's sort of a waffling, non-committal answer, but I can't tell you what to do, right? If you're a paper trader, I think the technicals here indicate that, this is like a confirmed breakout, right? Again, not financial advice. Don't go out there and buy a bunch of silver on leverage and then lose everything and say, Smart Silver Stacker told me to do it. It's his fault. Look, you got to be careful when you're trading paper markets. I view everything that I put into the paper markets as like something that I just may never see again, right? If I make a profit from it, great. Maybe if I'm lucky, I can pull some cash out of my trading and turn it into physical metal. I do one thing I have been doing with some of the proceeds from silver's rise, on paper, is I've just been diversifying into other dividend income producing assets. there's, you go do your research on that. I'm not an expert on that, but I'm trying to not get too heavily weighted to silver as it goes up, because, silver was already a huge portion of my portfolio before the bull run. And then, with the bull run, now it's like even more so. So I've actually been divesting myself of some paper assets and kind of trying to diversify into other stuff just in case, right? I think that's like a smart thing to do. Don't put all your eggs in one basket. I do like energy right now, by the way. Again, not financial advice, but like something that I have been building a position in. I don't know if I have it on my watch list here. Yeah, this XLEI ETF. This is the State Street Energy Sector Select SPDR Premium Income ETF. So this is an ETF that tracks the energy sector, but it uses a strategy where it sells covered calls to create a monthly dividend that is pretty hefty. But look, I mean, don't worry about any of that. If none of what I just said makes any sense to you, don't worry about it, right? This channel is about stacking, not about what I'm doing necessarily, although I might share that with you if you're, interested. But yeah, it might let's see, long story short, never a bad time to be stacking physical, in my humble opinion. Don't, do your own due diligence. That's all I've got to say about that. Anything else anybody wants me to cover in the chat? Yeah, Smart Silver Stacker. What is the best oil stock to invest in? WTI or USO? I can't give you specific advice like that, I am afraid. But I do have a favorable outlook on oil moving forward. Oil, you look at the silver to oil ratio, it's still an ounce of silver at $83 is more expensive than a barrel of oil. So a barrel of oil is cheaper than 1 ounce of silver. That is very uncommon historically. And to me, that means that either silver needs to correct from these levels or oil needs to rise significantly. And, given how bullish I am on silver, I think you can kind of do the math and figure out which of those two is a more probable event. But yeah, I think the price of oil has a lot of catching up to do. So anyway, just kind of my thoughts on a different commodity. Let's see. Someone says uranium. Yeah, Silver Aztec mentions uranium. Yeah, uranium's probably going to do well. I mean, if what they're saying about all these AI data centers is accurate, and we end up needing huge grid expansion, the nuclear is a pretty clean option, actually. And it has a lot of advantages that the other alternative energies don't have. Like, it doesn't have downtime when the sun isn't shining, right? Or when the wind isn't blowing. It's very steady, and there's been talk of individual companies like Microsoft, Meta, securing their own nuclear power setups to power their data centers. And yeah, that means they're going to need a lot of uranium. So long-term, probably not a bad thing to have some exposure to. Not financial advice. Let's see. Anyway, yeah, that's pretty much it for today, folks. If you got some value out of this and you found it interesting, do me a favor, subscribe to the channel, go over to x.com/stacksmarter and follow me there, and leave me a comment down below to let me know what you think about all the topics that we covered in today's live stream. Thanks for watching, everybody. Stay safe and happy stacking, and